All right then, welcome back. So the Monetary Policy Committee of the South African Reserve Bank deciding to keep interest rates unchanged, 3.5% for the repo rate and 7% then for the prime lending rate. Things remain the same. It's still one of the lowest repo rates that the country has had for a number of decades indeed. Joining me to unpack this data and information, Tendani Manchimuli from Liberty joins us, as well as Johan Elsden from Old Mutual as well. Thank you to both of you for joining us. Tendani, let's kick things off very quickly with you. The repo rate remaining unchanged, 2 out of the 5 though voting to have a cut in interest rates. Should that have actually been the decision here? Did the MPC miss a chance to cut interest rates?
I was expecting rates to remain unchanged, Arabile, but I do still hold the view that we have room for easing in the first half of 2021. Keeping the rates unchanged for now, for me, is the correct decision. The MPC still has to watch out to see, while they're saying that they're not worried about the impact of potential food inflation, they still have to watch out and see what is going to happen with oil prices. That, for me, is an upward risk to inflation, and prematurely cutting rate at this point, I don't think would have been the right decision.
Johan, as well, your thoughts then with regards to this one? It seems as if every single other metrics is helping the Reserve Bank say, well, you can actually cut rates at this point, but would another cut have actually helped?
Yes, good question. Yeah, you're right. There is actually room to cut, but since the Reserve Bank is taking a conservative view of what's happening in terms of the inflation outlook and in terms of recovering of growth, we expected the split decision and no cut. But you know what? On the margin, further cuts would probably help very little compared to the huge cuts that we've already seen during the course of the past year. But I think more important at this point is perhaps that should economic growth fall back a little bit and should inflation come out weaker than what the Reserve Bank's view is, they've got room to cut again, should they need to. I suspect, though, that more important is that I think that rates are going to stay low for a long period in South Africa, whether they cut another 25 basis points or not. We're in a low period of interest rates and probably going to stay low for an extended period, deep into next year. And even if an upcycle starts, I think it's going to be a very slow upcycle because inflation is going to remain well under control and the rand is probably going to be relatively stable. So there's no upward pressure on inflation at the moment. So low rates for long.
Let's get back to you then, Tendani, as well. Low rates for longer is supposed to be a good thing in the sense that consumers perhaps will be a little bit more buoyed, not just to enter into the housing market, but certainly to boost things like consumer spending, credit cards as well. All of those aspects continue to happen as well. More spending is exactly what it's supposed to do. But in a time like this, will we actually get that coming to the fore at all? While prices on the other end, the likes of electricity prices, oil prices, all of those continue to rise, which of course push up the secondary effects, which means inflation could begin to tick up at some stage if demand comes through.
Yeah, so inflation might pick up, but Arabile, my view is that the low interest rates for longer helps us in the sense that it's one of the few things that South Africa has going for it in terms of us picking up growth. I mean, growth is forecast to turn around and even improve to over 3%. One of the few things that we have is that the cost of capital is quite low in South Africa right now. So if confidence, particularly that of business, increases and they start investing and we start seeing that infrastructure spend that government is talking about come through, that will be helpful. In terms of consumers, specifically low interest for longer, yes, it's a two-edged sword. You know that those people who depend on interest or incomes from their investment from previous period, particularly those who are retirement and post-retirement, their spending has been curtailed significantly because of low interest rates. So if your income depends on interest rate, you are at the opposite end. For those of us who are indebted, we've seen the numbers that came through from the Reserve Bank you saw the debt servicing, the GDP, the debt to GDP is still quite high, over 70%.
Yeah.
So that is good news for those who are servicing their debts. And if your debt service costs remain low for longer, you're not going to have people defaulting. You are not going to have people unable to spend using their credit card. But again, Arabic, this is not good news for banks in terms of their profitability. Interest rates are this low for a long time.
Yeah. Johan, as well, perhaps getting your thoughts perhaps on, if we keep interest rates lower for longer, as I've said to Tendani, things are supposed to perhaps look a little bit better. The growth trajectory, though, isn't going in any particular direction. And yes, their main mandate may not be that. But even in the long term, or medium term, should I say, the inflation figure doesn't seem to even be hitting that 4.5% level, the midpoint of the Reserve Bank's target range, for a sustainable period. It's going to take a while to get there. Is this perhaps a little loss of credibility, or is this the Reserve Bank saying another cut in interest rates wouldn't have actually done anything for South Africa's growth, nor would it have done anything for consumer spending?
Yes, again, on your question, the committee itself was split on that decision, whether they should cut or not. So it wasn't unanimous, the decision to keep rates unchanged. But you're quite right. Better growth is expected this year, to a very large extent off the low base of last year, but to the global situation that is very positive for us at the moment. Strong growth in the US and China, strong commodity price increases, all of that will help South Africa recover this year. But you're right, inflation is likely to remain low for long as well. We're not hitting that midpoint of the target range. So on an annual average basis, inflation very much under control. So I think it just extends that argument of interest rates low for long. Yeah, absolutely, I agree. That is good for business, it's good for planning, it's good for confidence. It will help get more sustainability in the growth path. And I think we can look forward to a somewhat better medium-term economic growth than what we've become used to. Even before this crisis, annual average growth over the 5 years to 2019 was just 0.8%. That's almost nothing. Policy measures in place already will help us lift out of that.
How much worry do you think, Johan, there was in the back of their minds with regards to the pass-through onto things like international investors, the bond market here locally? Do you think that had some sort of say, that they were worried that they don't want to take investors away from South Africa in a time when we perhaps need their money most?
Yeah, you're quite right. The governor did mention that. It's an important part of their thinking. And let's give them credit. They're a central bank. They need to be conservative around these issues. But I think the global environment is very conducive to the risk on trade. Very low investment returns in the US. Investors are looking for better returns. And to some extent, investors are willing to ignore local fundamentals that's not looking fantastic when they can get better yields in emerging economies and in South Africa. So that risk on trade, I think we will get the benefit of that. I think there's room for the rand to strengthen even further and to remain relatively stable. So it's an environment almost where global factors will play a far larger role than weak local fundamentals, at least in the short term. So that will help us. Yeah.
Your thoughts perhaps, Tendani, to you over the same sort of notion as well, just that pass-through to South Africa's bond market. I mean, it's absolutely critical, right?
Yeah. But Arabi, I think back to a point that the governor made. I think someone had raised a question to say, yes, the environment is ripe almost for capital flows, but that is going to be taken advantage of by economies where the fundamentals are solid. What South Africa needs to do is to ensure that we improve the fundamentals of investing in our bond market. Things that, for me, pose an upward risk to us being viewed as an economy where the fundamentals are in place. One, like it or not, whether the economy is pumping or not, if you don't have a solid strategy in terms of how you're going to tackle the spread of COVID, at the end of the day, you might have to go back into a hard shutdown. So that, for now, without a vaccine plan that we say is landing on our shores in the next week or so, or certainty around that for me is an upward risk. The other risk that comes through for me is the fact that we are going back into a period of uncertainty in terms of electricity distribution.
Sure.
And that is something that any investor should pay attention to. Say, how is the economy going to recover? Manufacturing might recover after the lockdown, but if you are going to be confined to productive hours, 4.5 productive hours in a day, every 2 or 3 days, that becomes a problem. You have business confidence that we have started seeing an improvement last year. But I mean, without even looking at COVID,
Tindani, I'm going to have to unfortunately cut the conversation there. But thank you so much for that. I think the essence, you're quite right in that there's so much that still needs to be done, even from a fundamental point of view from government, and that this shouldn't be seen as some panacea to try and help them in their progress. So you're quite right. The fundamentals on the local side do need to be taken care of. Apologies for cutting you off there. Unfortunately, we do need to move to our breaking news story. So thank you so much for that conversation. Tendani Manchimuli from Liberty, as well as Johan Alsden from Old Mutual, joining us as we unpack that decision by the Monetary Policy Committee to keep interest rates unchanged at 3.5%.